Hi, I'm Richard Vague. This week we're going to briefly discuss recent inequality trends in the U.S. In prior videos, we have shown how debt increases the value of assets and in turn expands the net worth of households. However, most of that benefit goes to the wealthiest households. Therefore, with this growth comes greater inequality among U.S. households. The following chart illustrates this. It shows that according to the Fed's Distributional Financial Account, DFAs, from 1989 to 2019, the net worth of the top 20% increased markedly from 220% to 358% of GDP, while the net worth of the bottom 60% actually declined from 82% to 74% of GDP. But what about during the 3 years of the pandemic, from 2019 to 2022? During that period, household net worth increased by a whopping $27.5 trillion, fueled by a flood of government debt accompanied by an increase in private sector debt that saved the economy in a dark hour, but inundated the economy with money, pushing the value of real estate and stocks up by $23.4 trillion. This increase of $27.5 trillion, however, was not evenly distributed among households. If we look closer at the aggregate household balance sheet for the U.S., we can see that of the $27.5 trillion in increased net worth, $20 trillion went to the top 20% of earners, with $8 trillion alone going to the top 1%. That means in that 3-year period, the net worth to GDP of the top 20% increased by 16%, from 358% to 374%, and the net worth to GDP of the bottom 60% of the population essentially didn't increase at all, staying flat at 74%. Why? The answer is simple. We can see most of the increase was in stocks and real estate, and at the beginning of this period, the top 20% owned 69% of all stocks and real estate, while the bottom 60% only 15%. So the flood of debt pushed the real estate and stock prices up, and since the wealthiest own the vast majority of these assets, the inevitable consequence was that inequality widened. That's it for this week. Thanks.